Hi guys, and welcome to this week's live episode of Bonkers.ie TV, where we're all about smart money and keeping you updated on everything from the world of personal finance and consumer affairs. You might have missed us last week as we were deep in preparations for the National Consumer Awards, which took place in the Round Room of Dublin's Mansion House. The big winner of the night, of course, bringing home Consumer Business of the Year was SSE Electricity, so congrats to them. And make sure you hop over to our blog to check out all of the winners from the event. This week, though, we're all about personal finance and, more accurately, all about current accounts. And we start off this week, Dara, with Ulster Bank, who had a couple of changes during the week.
Yeah, so Ulster Bank have just announced changes to the current account fee structure. So at the moment, you pay a €4 monthly account maintenance fee, and after that, you get all of your day-to-day banking transactions for free. So it's €48 over the course of the year, but it's quite transparent. It's easy to follow, and like I said, after that, all of your transactions are free. So it's not a bad value, or rather, it wasn't a bad value current account up until now, and they also offered access to things like Apple Pay and Google Pay. What they've done just yesterday is that they've amended their fee structure slightly to bring it more into line with AIB and Bank of Ireland, which isn't a good thing. What it's going to mean is that the €4 monthly fee is going to become a €2 monthly fee, which might seem good. However, you're now going to be stung with charges every time you use your current account to maybe make a chip and PIN transaction, a contactless transaction, any day-to-day banking transactions that you use are now going to incur a fee. And unfortunately, it really means that if you're a medium to, I suppose, normal to slightly heavy user of the account, you're going to see an increase in fees.
Yeah, so someone like me who tries to carry around as little cash at all times as possible and tries to use my card as much, I would be penalised quite heavily.
Pretty much, yeah. I was actually doing a calculation myself. I'd probably regard myself as being a medium account user, and for me, I'd go from being charged the €4 to about maybe like €6 or €7. So if you like to kind of tap and pay, if you've a lot of direct debits on the account, you're going to start racking up a lot of fees. So like I said, it's very similar to the structure that AIB and Bank of Ireland have, and really, it's not great news for consumers.
Yeah. So speaking of AIB, let's kind of have an analysis of their.
Yes, let's go through them all. So AIB, again, is not one of the best ones. Obviously, they're the bank that everybody knows. They've lots and lots of branches around the country, which is a good thing. With AIB, you'll be charged a €4.50 quarterly fee, which is tough to avoid. And on top of that as well, you'll also be charged 20 cents every time you make a transaction. So that's every time you go to the chip and PIN, or anytime there's a direct debit presented on the account. You'll also be charged 35 cents every time you withdraw cash. So the charges can really, really add up. However, if you keep €2,500 in the account at all times, you can avoid the fees. But you do need to keep the 2,500 at all times. And I don't know about you, but I certainly don't have £2,500 to just leave in my account. And even if you go below the 2,500 for even one day during the entire quarter, you'll rack up fees for the whole quarter. So unless you have £2,500 that you've nothing to do with, you're going to get racked up. You're going to be hit with a lot of fees with AIB.
Yeah, so root around the couch cushions there for that extra change. What about Bank of Ireland?
Bank of Ireland, similar to AIB. So in this case, they have a €5 monthly account, or quarterly maintenance fee, so €20 over the year compared to AIB's €18 over the year, and then you'll be charged 10 cents for most day-to-day transactions, so a little bit less than AIB. So again, that's 10 cents every time you pretty much use your card or you have a direct debit presented on the account. Contactless transactions are 1 cent for now. They're actually free with AIB for now. They're 1 cent with Bank of Ireland, which I guess isn't too bad. But there's no way to avoid the €5 monthly fee. So similar to AIB, if you have €3,000 this time that you're prepared to keep in your account at all stages, you can avoid the day-to-day fees, but you'll always be charged a €5 monthly account maintenance fee. So there's no way of avoiding some of the fees with Bank of Ireland. And so again, not really a great value account in my opinion. Also as well, there is no access to Google Pay or Apple Pay, surprisingly. AIB does have both of those, but for Bank of Ireland, they've haven't launched it yet, and we don't know if they are going to.
Yeah, their app is pretty clunky as well.
Yeah, I mean, they haven't really kind of upped their game really as much as AIB or even KBC in the digital world. But I know they are going through a lot of kind of technological change and strategizing at the moment. So hopefully, I think in the next maybe 12 to 24 months, we'll see some good things coming out from them.
Yeah, one bank that you mentioned there that actually does have a really good kind of digital portfolio is KBC.
Yeah, so KBC have two current accounts. We'll focus just on one. So one of the accounts that they have, which is called the KBC Extra account. And with this account, if you lodge €2,500 a month, so that's around maybe earning €40,000 gross a month. If you lodge that into the account, all of your day-to-day banking is free. And you don't need to keep the €2,500 there. So you can get paid on payday, and then you can take the money out and start using it. And like I said, all of your day-to-day banking is free. Also, they've Apple Pay, they've Google Pay, they've Fitbit Pay, they've Garmin Pay. So they're the only bank to offer choices from all of those digital payment companies, which is great. They have a good mobile app. You can open up an account with them really, really easily and quickly through the app. And also as well, if you take out this extra account, if you have a mortgage with KBC or a loan with KBC, you'll receive preferential rates of interest. So certainly out of the three big ones that we've done so far, KBC isn't a bad choice.
Yeah, actually, they tied an award with Revolut.
Yeah, they did for best mobile app experience, and it was a worthy winner. It is a really, really good app, and they've really, really upped their game recently. And of course, now you can actually, if you have an account with AIB or Bank of Ireland, you can see that account balance through the KBC app, which is as a result of PSD2, which was a piece of European Union legislation that was introduced recently. So yeah, so it's not a bad value account if people are looking to move to it.
So in terms of permanent TSB?
Yeah, so permanent TSB have a really, really good choice as well, and maybe out of the the big four traditional banks, this might be my favourite. So there's a €4 monthly account maintenance fee, similar to what Ulster Bank used to have, and then after that, all of your day-to-day banking is free. So no matter how much you use your card, you won't be charged anything extra. Permanent TSB do have an unusual feature that every time you pay with your card, so every time you use your card either in store or online, you'll actually receive 10 cents back, and you can earn up to €5 a month through this feature alone. And it's part of Permanent TSB's strategy to get people to use their card as opposed to cash. But what it means is, whilst you might be charged €4 at the start of the month, you could earn €5 by the end of the month. So you could actually earn €1 a month or €12 a year, and get all of your day-to-day banking included in that. So it's a really, really good option. Also with Permanent TSB, if you pay your SSE electricity bill or your Sky bill from the account by direct debit, you can earn cash back on those bills as well, so you can earn even more. And also, if you pay your mortgage from the Explorer account, you can receive 2% cash back on your mortgage. So even though there is that €4 monthly charge up front, there's lots of cash back that you can actually earn, which can basically more than compensate. Now, the big, I suppose, for me, negative about Permanent TSB, unfortunately, is that they still don't have access to Google Pay or Apple Pay, similar to Bank of Ireland. And I'm not sure if they've any choice or any kind of plans to do that shortly. So for some people, I mean, they mightn't care, if people still like using their card. I know for me personally, I love to be able to use mobile payments. So that's the only thing that I really don't like about this account. But if you're looking to reduce your fees, it's a good option.
So in terms of fintech has really kind of disrupted the banking sector this year, and one of the big things to come into the market were apps like Revolut, but another one offering a current account is N26.
Yeah, and N26 is another good option as well. So N26 is a fully licensed bank now in Ireland. It's a German bank, but it's licensed here by the central bank under what's called conduct of business rules. So your money is as safe in this account as it is in any of the other traditional banks. And with N26, it's free to set up the account. There's no monthly charge. There's no day-to-day fees within a certain limit. And if you download the N26 app, you can set up a new account really within minutes. You just take a selfie for proof of ID. You then you take a photo of your passport as proof of address, and you send it through the app. And then around 3 or 4 days later, you get the card in the post. So it's a really, really good app. The only main charge that they have is that you get 5 free ATM withdrawals a month. After that, though, you're charged €2 per ATM withdrawal. So if you do use cash a lot, it's probably not the bank account for you. However, if you use your card a huge amount and only take out cash every now and then, it's a really, really good choice. They've Apple Pay, they've Google Pay. Like I said, they've a great app and it's really, really quick and easy to set up your account. And also another good thing about N26 is that they don't charge foreign exchange fees on transactions. So for all of the other banks, if you go to the UK or if you go to the States, every time you use your card, you'll be charged a foreign exchange transaction fee of around 1.5 to maybe 3%. So let's say, for example, you buy something for the equivalent of €100, you'll actually be charged €3 just for using it. With N26, those charges don't apply. So, for example, if you were to go maybe to the States and maybe splash out in a big holiday and spend around €2,000, you could save around maybe €40 to €50 in fees. So that's a really key selling point of the account. So yeah, if people are looking for a new option, it's a really, really good alternative. And maybe just to highlight, it is a fully fledged bank now. You'll get an IBAN number, you'll get an IBIC number. You have to be paid into it by law. So if you give the number to your employer, they have to pay into it. And it's a good solution. What I'm kind of hearing though is a lot of people are moving to banks like Revolut and N26, but they're afraid to kind of close their existing bank account. And so maybe, I don't know, if you're an Ulster Bank customer, that might be an option for you. But like I said, there's no point overpaying or paying twice.
Yeah, so let me throw a scenario actually, if for no other reason than getting free financial advice. So I have been with the same bank since I was 13 years old. When I got my first job, my mother set up my bank account at Bank of Ireland. So should I switch? Like, why should I switch?
Well, switching saves, and we always talk about switching at Bonkers.ie and switching saves. However, having said that, though, the level of switching current accounts is chronically low. So less than 1% of people switch. In fact, less than 0.5% of people switch. And the banks know that, and that's the reason why they're bringing in all of these extra fees and charges. But absolutely, switching saves, it's not as difficult as people think. So a few years ago, the central bank actually brought in new switching rules, which means that your new current account has to be up and running within around 10 days of you making the switch. So absolutely, and like I said, you could switch, to, or at least open a new account with N26 within minutes today. So it's definitely something that people could look into. Maybe one little thing that I advise people to do is, if you are afraid that direct debits are going to get missed or things like that, what you could do is you could open up maybe a Revolut account or an N26 account. You could keep your existing account open for a few months, but just transfer the money every month. And then once you're kind of comfortable with the new account and all of your direct debits and your pay has been transferred over, then kind of close the old accounts. But either way, like I said, you can avoid fees by using N26 or Revolut, almost immediately.
So, for instance, like I'm very frustrated with the bank that I'm with, because for starters, like, they never seem to be open. I can some of the bank locations don't have a money desk when you're kind of looking for it. So
right.
like, I would, if someone like Revolut were to set up a current account function, I'd probably set one up in the morning. The thing I'd be worried about though is, should people be worried, like, say if I down the line wanted to buy a house and we're looking for a mortgage with a bank, is there any influence there?
Not really. There's actually two things I think that you raised. The first is that a lot of people are afraid to move to some of the newer digital alternatives because they don't have a physical presence. But like you said, even the banks that do have a physical presence, half the time you can't get to them anyway. So it's like it's no point. But like, no, and that is a good question. When you're looking for a mortgage, a bank, you do not need to be with the existing bank, to get a mortgage. So if you're, let's say, for example, a Bank of Ireland current account customer, you can go to AIB or Permanent TSB and get a mortgage from them, even if you've never set foot in one of those branches. So that's absolutely nothing to worry about. Sometimes people go to their existing bank to get a mortgage just because it's a little bit easier. So the bank obviously already has your address details, they can see your current account, so there's maybe a tiny little bit less paperwork. But if you decide tomorrow that you're going to switch to Revolut or switch to N26, that's not going to affect you being able to get a mortgage in particular with any of the banks going forward. And actually N26 and Revolut have plans to get into the loan market, not the mortgage market, but they plan to introduce credit cards and loans in the near future.
Yeah, I mean, who's to say with the pace that they're moving and introducing products, who's to say that they won't be offering it when I am actually
absolutely.
40 years time. So that's it for this week. For more information, make sure you head over to our blog, and if you have any questions, make sure to get in touch with us either on Facebook, Twitter, down below. You can get in touch. That's all from us for this week. Thanks so much.